Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates. Dollar strength backed by rise in US yields has once again put pressure on the rest of the world currencies. Euro has broken the 1.05 mark. Korean won has been under pressure, trading weaker. Chinese yuan has also been weaker, trading at 7.32. All this happening while some Fed members call for another hike. Yields on the longer end continue to rise, and I wonder if it's time before something breaks in the market. Morning, JK. What are your thoughts on the rise in yields, especially in the US? Is there a threat of something similar to the UK gilt crisis happening?
Good morning. Welcome back after a long weekend. Yeah, I think over the weekend we had some relieving news about U.S. government shutdown being averted, at least for now, actually up to November 17th, and also news that the auto workers had ended the strike. So both of these actually meant one, U.S. government will continue to borrow for their spending. They'll continue to borrow more, and then the ending of the strike means that there is no threat to any U.S. consumers' hectic activity. So the resultant effect was U.S. yields going up again. In fact, they opened with a gap in Japanese market yesterday, and that continued. And U.S. yields move is actually having an impact on everything else. So the 10-year yield hit 4.70%, up some 12 basis points. And of course, now currently trades around 4.69. And the 30-year also went up by about 10 basis points. And all this, coming on the back of, higher fiscal spending by the US government, more borrowing, less demand, and US government, the US economy doing much better than all others was once again confirmed by the ISM manufacturing survey, which showed good activity level, although it still remains in the contraction territory of 50, which is the bifurcating line, but still there was a good jump in activity. Employment and the new orders indexes were quite strong, although the prices paid were lower, which is again a good news. So all in all, we have good news from the US economy, and we have yields going up, and it is not surprising, therefore, that the US dollar has been strong across the spectrum of currencies. Now, on the stocks, of course, the US markets ended with modest changes and mixed, but global markets were weaker, and that's mainly on the back of higher US yields and also the higher US dollar, particularly for the EM currencies. It has a major impact. Yields were also higher in UK and Europe because the finance minister in UK was pouring cold water on going calls for tax cuts, and also the UK is also the man who is the UK economist also said that her forecasts were different from what the BOE was forecasting on inflation and growth. So European UK yields also went up. European yields also went up because one of the ECB members said that they have still a long way to fight inflation. So all in all, yields were supported and stocks were down globally, although in US they were found sideways. Now the weaker sentiment and US debt outperformance has seen the broad-based support for dollar. The dollar index has recovered all the losses that it suffered on Friday. It was more of a technical bounce in the currencies on the last day of the quarter, and that has been more than reversed, in fact, because we are seeing yen close to 150 today. Then the euro dollar is at a new cycle low at 1.0460. The UK pound is just waiting to break down towards 1.18. So technically, euro is pointing towards 1.02 at the worst case, with the yield difference between Germany and Italian bonds, which is an indication of the peripheral stress, is coming into play once again. So the euro will be normally pushed down in such a circumstance unless the ECB comes out with some program to support the Italian bond market. Italy, in fact, has announced a larger fiscal deficit this year. So that's something that will be in play. So euro headed lower, definitely much lower from here, and then GBP also. Yen, of course, because the overall strength of the dollar is apparent, the Japanese may refrain from intervention because of the overall sentiment in the market, and we might as well move beyond 150 without intervention, and that can take us towards 150, where it becomes more sensitive for intervention, according to me. And also on the rupee, of course, on Friday we did see some recovery in the rupee towards 3.03. That was more because of a very thin market where there was very little buying from the usual suspects, and also there was some month-end on quarter-end related selling from exporters. But the rise in dollar index, Chinese yuan beyond 7.32, all of this once again has brought the spot above 83.20 in the offshore market, and we are into a new month, new quarter. So generally a shift in this periodicity has seen some movement in the USD INR, but it's all up to the central bank whether they want to adjust the currency on the weaker side in line with other currencies, even as RER is above 105. We have had a good correction in the crude prices as well. Therefore, inflation may not be a factor to hold down the USD INR, because as the global economy weakens, the US itself is showing some signs. Although manufacturing is holding up, there are other signs which are showing some weakness in the US economy. Europe and China are already weak, so the crude prices correcting down may also encourage or rather be a supportive factor for USD INR to move higher without impacting the imported inflation. So focusing closely on 83.30 level once again. If it is held, again, we are into a tight range, but if it breaks, there can be some sizable short covering or fresh action by importers on a stop loss basis, which can take us towards 83.50 and then 83.80. Thank you.
Thank you, Jackie. And of course, during the weekend, the big news was the US government shutdown, which was averted at least for some time, and also auto workers ending their strike. So basically, US government will continue to borrow, which will put further pressure on the US yields. So if we look at the theme is dollar has been supported mainly due to the better economic performance, like relatively better economic performance, higher for longer stance, as well as the support of the yields. For rupee, there was some recovery on Friday, but it's once again under pressure due to the broad dollar strength. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial market.